Hello everyone, welcome to GOAT. So today we're going to learn how to make a very simple but very powerful finance tracker in Excel, and it's going to be very easy. There's going to be no code, and all it's going to use is basically SUMIFs. Hello, my name is Jeremy. Welcome so much. If you find this useful, give it a like, thumbs up, subscribe for more videos. Let's go ahead and get started. So the first thing we're going to want to do is obviously open Excel. And here I have Excel. I just have the ribbon hid so that you guys can see more of the screen here. Now, what I've done is this first tab down here, I have a worksheet. Let me move myself so you can see. There we go. We named it. Let's move over here. Okay, we named it template. And so what this is the template for your future months. So this finance tracker will be tracking by months. And it's very simple to use, and that's the beauty of it is. And so let's go through it. So first what I did on this first column here, I put item. Now these are both charges and income. So real quick, you may be wondering why I did not make this a table, because a table, although it has some very structured reference calculations, very cool structured reference calculations, for this example, because we're just making a copy of the spreadsheet, of the template spreadsheet, then we don't really need to use a table. They actually cause more problem than they're worth. You probably could adapt this to a table. Let me know in the comments below if you would like to see me adapt this using tables and structured reference calculations that I know I will have during the months. These are not real numbers, these are fake numbers, but these are some of the charges I have to deal with. So a Hulu subscription, mortgage, giving to charity, water, some utilities, etc. So what I do is on this first column, I make an item and I just list the either the income or the expense. On the second column here, I list the day that these are typically charged. Now I only use one credit card for points, so I use it like a debit card. So I charge things and then I immediately pay it off. So this is why this sheet only has one bank balance, my primary bank balance, and one card balance, but you could use multiple cards. You would just have to adapt this. So on the second column, I have the day that the charge or the income typically hits my account. So we'll need this, and you want those in order. Now on the third column, I have the amount. Now I have formatted this column. If you hit Control 1, you can do currency. I have it as a currency, I believe, with negative is red, but you can do whatever you want. Just be sure that one is the negative, the charges are negative, and the income is positive. Now over here, this is something I did just for gee whiz. This tells me what charges are vital and what charges are non-vital, and I'll show you how those work. And then over here I have a column called counted. Now these are blank, so keep these blank. Now after I made the column counted and all the other columns, I come over here to this part right here, and you can see I will zoom in on the SUMIFs formula, but I just put a formula, future template bills, and it's a SUMIFs, which means I'm looking at more than one criterion, or criteria would be plural. So SUMIFs C, so I'm gonna SUMIFs this column. First I'm looking at E if it's blank, so that's what that means, E colon E blank, and if C is less than 0. So what this means is when I'm looking at this, now this again, this planner is for each month. So when I copy this for the relevant month, and you'll see that in a minute, what this is telling me is, okay, my future bills, my template bills, I have negative $1,962 in billing that have not been counted. And then my future income, look at the formula. It's very similar to this one. You can actually copy this formula, paste it, and then swap your less than to a greater than. So SUMIFs CC, EE, double quote for blank, CC greater than 0. So this is telling me, without any other input, that I have future bills of almost $2,000 and future income of $4,000. Now these I will make, these are items you type in every time you open the spreadsheet, and you'll see that in action, and they have no formula. And then down here, my predicted balance is just summing J1 through J13. So I just sum this entire column, and that's going to give me this. And that's the beauty of this spreadsheet, is that you can jump into it at any time. You don't have to backfill hundreds and hundreds of entries, etc. Now down here I've done something interesting. I want to see my non-vital recurring spending. So I want to see if I had to cut out my spending, how much could I cut out? And again, it's a SUMIFs. I SUMIFs C. First I look at the C column and it's less than 0, and then I look at D and it's not equal to X. So anything that's less than 0 and does not have an X in the D column is non-vital spending. And you can see if I had to cut out my spending, it would be $268.54 I could save each month. Now the vital recurring costs are just very similar. SUMIFs CC, less than 0, but DD equals X. You don't have to do the equals, you can just put the X there. That's vital recurring costs. And again, once I sum these up, that equals the same as this right here because we have not done any charges. Okay, so now how are we going to use this? So we have our template, so we will not fill our template out unless we get new bills or new income. So these are our predictable bills and income. So we're just going to make a copy of this, make a copy, move to the end, and we're going to name it the month that we talk about. So let's do Feb 2025. Okay, so now we are looking at February, and let's pretend we have not, it is the beginning of the month and we don't have bills. And I check my bank account and my current bank account balance is $2,000. So now you will see right here that my predicted balance with all of my future bills, nothing has been counted yet, is $4,000. And then my current card balance, let's say I started with $100. And this needs to be negative. There we go. So if I don't spend anything but my recurring bills and don't earn any income except my recurring income, at the end of February, I will have $3,900 left over. Now notice this does not count things like food and restaurants because these are recurring predictable bills. So what happens? Let's say I go to a restaurant and I buy dinner for my family and it's $150. So how would I, if I wanted to record that, how would I do it? So notice I said if I wanted to, so I could say restaurant, whatever. We went on the first, it was -200. Now then, if it does not show up on my credit card yet, I would leave this alone. But if it does show up on my credit card, I'm going to count what's on my credit card plus pending. And my personal credit card online, it shows pending. So I see that charge of 200 hit, so I have 300, and now this is counted. Oh, sorry, it's not vital, it's counted. Now notice, because I put this in here just for history, for my sake, to know that, okay, I went to a restaurant and it was $200. I didn't have to do that. I could have just said, okay, I have a current card of -$300. Okay, I went to the restaurant. As long as you keep these two numbers in check, everything works out. So let's put that back in there. I went on the first, it was -200, and yes, it is counted. So if you don't put the counted, notice what will happen. So we have the current card balance of -300. But if I forget to say, oh, I've already counted this, then it's going to tell me I have 3,500 at the end of the month, when really I have 37, because you can't, you're double counting, counting it against yourself. So you have to say, oh, no, I've already counted this charge. It's rolled up within this figure here. So you may ask yourself, okay, well, how do we do this in the middle of the month? So let's make a copy of the template, create a copy, and we're just going to keep it template 2. So let's imagine we're starting and we're in the middle of the month, and that's the beauty of the spreadsheet, is you can jump into it at any time. So I would open my banking account statement, and let's say I have $2,500 in my bank account, and my current card balance is -$1,500. And since let's see, today is February 18th, I would double check my accounts. I've already paid all of these things. I've already been paid or have paid all of these bills. So now we are caught up. So now, according to the spreadsheet, again, I'm looking at the bank balance and I put in what is today. And that's very important over here. You have to update this every time you look at it. So my bank balance as of today is $2,500. My card balance is -$1,500, and I have already paid these bills or gotten these paychecks. So now it knows, okay, my future template bills are these two right here. negative 268. My future income is this. And when it takes that into account with these two, I have a predicted end of month balance of 2731. Now, that is pretty easy to use, I would say. The one thing you have to remember is this is not very good for analyzing what you're spending your money on unless you remember to log each item and then count it. So let's go back here. So what if I wanted to track how much I'm spending on a restaurant each month? So I could say, okay, I went to the restaurant on the 1st, it was negative 200, but that's already counted. And then I went to the restaurant on the 8th, and it was negative 100. Again, that's already counted. So you can keep doing this if you want to analyze what you're spending, or you can just say, okay, I'm not gonna line item track all of my things in my finances. Instead, I'm just going to use this method. I'm going to always update my current bank balance, my current card balance, and then I'm going to track what has yet to be paid for this month or what has yet to have income. Now, you have to be really careful. Let's say I make a large payment through my bank account, but it does not register. So that's something you would want to track on here. So for instance, let's say I wrote an electronic check to someone, e-check, and it was going to happen on the 25th, and it's negative 1,000. That's how I can predict, okay, I know I'm going to write this check, but I haven't counted it yet. So it has not been updated on this balance. Okay, so now at the end of the month, I will have $1,700. What if I see the e-check hit my bank account? I will check my bank account. Oh no, look, my bank account is $1,500, but I count this. So again, my predicted balance is back up to $1,700, and it's that easy. Thanks so much for watching. I hope you enjoyed it. Leave a comment below if you find this useful, or if you have any tweaks, or if you use a similar method in your accounting. God bless.